Oh, well, hold up. Is Microsoft actually canceling data center leases? And what does this potentially mean for AI and the whole like freaking economy that's surrounding it? Or is this potentially just because of a reduced partnership between OpenAI and Microsoft? After all, OpenAI is partnering with Stargate, which is a partnership between Oracle and SoftBank, and not exactly just Microsoft here. So we got a few things to put together, but first, I gotta say this. Hey everyone, me Kevin here. You gotta get the intro. Now, a couple days ago, we talked about Satya Nadella and this interview that he gave, where he talked about, hey, it's really important to make sure that artificial intelligence supply does not so far exceed the level of demand that you have, so that you actually escape your ability to earn a return on investment. So let me put it in English. If you have a lemonade stand, you should not have 1 million cups of lemonade on your lemonade stand. Maybe you should have 10 and try to sell those 10 first and then make more. Now, of course, there are economies basically at this point built around supplying these lemonade stands with chips and server racks and artificial intelligence compute capability, energy infrastructure, you name it. So this actually came up via a rumor first. And before I made my last video reviewing the Satya Nadella interview, I actually saw the rumor, but I didn't cover it. Not because I didn't want to give you the most recent information, but because at that point, it was unclear if it was just rumor mill. There are plenty of people just harping on this idea that, oh, the AI bubble is over. And I don't want to just echo what is potentially misinformation. But now that I'm getting more and more corroborated data on this, it's worth noting that it could still be wrong. There could be idiosyncratic problems with Microsoft, or this could be the beginning of a larger trend. So what I'd like to do is go through this and then analyze what could be going on here. I'd also like to just first speculate that it is entirely possible that the DeepSeek effect is still present. Now, most people argue, nah, man, the DeepSeek effect isn't going to have an impact. It's actually just going to lead to an increase in usage for AI. And look, I believe that AI usage can go up. But remember, if you can make it so much more efficient to utilize AI, how many more queries are you going to send to ChatGPT? In other words, if all of us together, we're in a classroom together, let's say, and there are 25 of us, and we send 10 inquiries a day to GPT, okay, fantastic. We're sending 250 inquiries. And if half of you are using Grok now, and a quarter of you are using Cloud, and a quarter of you are using GPT, then there's even less on GPT, but the aggregate is still 250 inquiries, right? If it now becomes 10 times cheaper to provide that answer because of supply side efficiencies. In other words, they can manufacture those answers for us with 1/10 of the compute. Does that mean all of us are going to 10x our output? Are we going to go from 250 queries to 2,500? No, of course not. Now, is it possible that maybe one of you was a research scientist and you're like, my gosh, I'd love to increase my input, but the cost per query is too high for my research purposes, and so I would like to increase my input, of course, or output, of course. You're going to send more queries, but not everybody will. So I don't necessarily agree with this argument that unless there's this significant improvement in how good AI is, that everybody is going to go from the 2022, I should say, level of AI queries, basically zero, to the level of 2024 AI queries, call that 100%. I don't necessarily think we're going to go from 0 to 100 to 200 just because the supply side is more efficient. Maybe we'll go from 0 to 100 to 105 or 110, right? Some users will use more, but not everybody will. And so this means the underlying DeepSeek problem is still present, that there is a possibility that Satya Nadella was correct in that we don't want to oversupply. Let's actually build the infrastructure. Let's get a return on the infrastructure. And then let's actually, continue to reinvest at that point. Now, a lot of folks, especially on X, and I think there's certainly a lot of knee bending going on here. People like to get on the floor and go, for Elon. So there's a lot of talk about how great and wonderful Grok is, and it might be wonderful. Maybe it's the best AI you've used. That's fine. And I'm not here to say that one AI is better than another. Just because who was it? I think it was it GPT that beat the Minecraft game at the end, but Claude didn't, and Gemini, I don't know, had some problems with creating the workbench at the beginning. I don't know. Just because one is better than the other, I don't necessarily think leads to more queries. And that's the big question, right? How many more queries are we really going to get? How much increase in demand are we really going to get? And I think Satya Nadella is actually making a reasonable approach here where he's being smart. And I've been critical of his sort of blind optimism on wanting to continue to spend. But then, since then, and I'm not saying, he's changed his opinion because of me, and of course we're going to go through this document here. But since that moment where I was sort of, engaging on X about like, this is ridiculous, the podcast came out where Satya's actually like, yeah, we want to evaluate some ROI before we keep spending. I'm like, okay. So maybe he's hearing the criticism, and some investors are saying, yeah, no, we need some ROI here before we keep going, because if we just dilute AI and we're not actually creating more demand, everybody's just taking, pieces of the same pie. The pie isn't actually growing. Then why do we want to keep spending? Is Elon Musk really going to build out another Nashville, Tennessee, super infrastructure for XAI, or does he need to now focus on marketing and getting, they've already gotten Grok to top in app downloads, which is fantastic. You should go download it, give it a shot, right? I have no horse in this race. I don't really care what you use. Try them all is what I always say. But is he now going to go out and build another sort of giga AI factory using Blackwell chips, or are we going to focus on some ROI here first? And I think that's exactly what's going on here. So what do we have here? Channel checks indicate U.S. data center lease cancellations by Microsoft. Our channel checks indicate that Microsoft has canceled leases in the United States totaling, quote, a couple hundred megawatts, with at least 2 private data center operators. Number 2, Microsoft has pulled back on the conversion of, statements of qualifications. These are pre-lease statements that you get saying, yeah, we're capable of building out that data center for you. And those usually convert to leases, but apparently those are getting canned. And number 3, has reallocated a considerable portion of its international spend to the United States, which is good. That's basically what Trump wants, right? Is more of that reallocation to the United States. So seeing a reallocation to the United States is great, but this cancellation of leases has also occurred in the United States. So it's kind of like, okay, got it. You're going to move more of the data centers to the United States, probably to, also to some extent bend the knee to the United States current federal regime, which is probably a good thing because we want our data stored locally anyway, even if it's a little bit more expensive. Maybe we'll get an upside of lower latency, though. I don't think that's a terribly big issue. What's the difference of a few milliseconds on your GPT response? I suppose maybe for certain tasks a lot, but this is not like we're playing video games when we're asking for ChatGPT to respond to our generic encyclopedic responses or inquiries. Anyway, when coupled with our prior channel checks, this now points to a potential oversupply position for Microsoft for data centers, right? Our channel checks indicate Microsoft has canceled select data centers and leases and has pulled back on conversions to leases and pulled back on international market expansion. So you've got multiple things going on here. I'm not going to read all of this word for word here, but our checks indicate that in some situations, Microsoft is using facility power delays as a justification for termination. In other words, they're looking for excuses to terminate a contract. Recall, as we highlighted in our 2023 takeaways, this is the same tactic that Meta used to cancel multiple data center leases in the United States after we learned in our checks that Meta had then canceled $4 billion of capex programs related to the metaverse. Okay, so now it's worth noting, and then they basically say 2 weeks later, Meta ended up cutting their guidance for capex. Now, I just want to be clear with a few things here. I'm not saying that Microsoft's not going to spend this money in CapEx. It could just get reallocated to something like humanoid robotics. I actually think all of the big Mag 7s, maybe with, with some exception, pretty much all of them are going to get into humanoid robotics. And this is a sector that's just going to blow up in time. This is obvious. I don't know how soon we should actually expect humanoid robotics, especially if there's a larger macro event that delays all of this, which is entirely possible. But I would argue that humanoid robots are going to be part of our future. So is it possible then that we see this sort of Q1 confirmation of capex transition to different forms of capex? Absolutely. And is that going to be good for other economies? Yes, but then we want a heads up on that. Okay, so where are robotics companies we can invest into? My VC invested into robotics, so everybody who invested with me in that venture capital fund, we're in on humanoid robotics. That said, when it comes to the potential for a slowdown in capex and then no offset, that's worst case scenario. Because now we're not looking at, okay, well, the money's just going to go to different forms of chips. It's going to go to actuators. It's going to go to battery manufacturers and certain software plays. It actually just goes nowhere, right? We want money being spent. Money sitting in a savings account at Microsoft is not good for GDP. It has a velocity of like 1. In other words, it's spent one time, goes in Microsoft's pockets, and then dies. That's really bad for GDP. Ironically, the biggest velocity creator is the government because it's so wasteful. The money actually circulates a lot. So, if you're now getting cutting via a lack of spending at some of the big plays like Microsoft, and the government is cutting, it is not an ideal scenario, especially when the Cape-Shiller index puts you at, pre-Great Depression and pre-dot-com bubble valuations. That said, we're probably going to bounce in markets tomorrow. I would anticipate that, unless there's some kind of crazy news. Everything over the weekend seems to have occurred pretty much as expected, German elections and otherwise. So I would anticipate some form of bounce in markets tomorrow, and I think it's an easy sort of bet to make unless there's some bad news. We get PCE this week. I don't think that's going to be particularly bad, mostly because the PCE components from PPI and CPI were actually pretty decent, and that'll carry over to PCE. So I don't see that as a problem, and I don't see any kind of unemployment catalyst. I mean, we really don't get another jobs report until 2 weeks from now. So we've got some time on that. That's like 1.5 weeks from now. But I suppose what we want to pay attention to is the potential for any kind of downside announcements from these capex companies. So let's see here. Let's take a look at what else is happening here. So the article then goes on to say that, they sort of give a little precursor here and say, hey, you got 2 weeks, which, by the way, I should be jet rated by then, which would be really cool. I'm actually in Florida right now in my short shorts, ready to go work out. But I'm in Florida because I'm doing my wrapping up my multi-engine trading over here and then getting my jet rating. That's kind of cool. But anyway, at the same time, we're still going to be doing our course member live streams over the next few days. And we've got that price increase on the courses coming at the end of this week. So hop into those if you haven't yet for my signals on fundamental analysis, trade alerts, real estate analysis, you name it. We've got some wonderful things there and some new lectures coming out on Trumponomics. But take a look at this. Why is this happening, says TD Cohen. TD Cohen says, while we have yet to get to the level of color via our channel checks that we would like to in why this is occurring, our initial reaction is that it is tied to Microsoft potentially being in an oversupply condition. Okay, we're into that. As we highlighted in our recent takeaways, we learned via our channel checks that Microsoft walked away from multiple deals, is in early mid stages of negotiations on other deals that have now been canceled, and let 1+ gigawatts of letters of intent on larger footprint sites expire, has also walked away from at least 5 land projects that it had under contract in multiple tier 1 markets. At the same time, we highlight the magnitude of potential data center capacity and walked away from, and the decision to pull back on land acquisition, in our view, indicates the loss of a major demand signal from Microsoft. That was originally, responding to what we believed was a shift in their appetite for capacity tied to OpenAI, which recent reports seem to reiterate. Keep in mind, OpenAI has just partnered with, the whole Stargate project. But we believe this indicates a decision to pause construction on data centers in Wisconsin. That was a big plant, by the way. That was a big deal. Prior channel checks indicated those were designed, or the Wisconsin facility was designed to support OpenAI. So maybe somebody else was picking up that contract instead of Microsoft. But anyway, SoftBank, who knows? But there's also a capacity that is likely procured, particularly in areas where capacity, blah, 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 blah. So, okay, basically... They think that there's a potential Microsoft has some new internal forecasts that's like, all right, look, we got plenty. If we need more, we could just go rent it from somewhere else. Because remember, this is not just Microsoft building out their own data center capacity. Like, you could pick up excess capacity from other data center providers as well. There are plenty of them. If you want to go rent an H100, you can do that. There are plenty of providers. Just Google rent H100 and you can kind of track prices over time. I actually recommend you make a little spreadsheet and you just track those prices over time, and you can sort of see what overall market demand versus supply is. Those current excuse me, per hour prices help you keep your finger on sort of the pulse of the market. And they've been declining because, well, now you've got potentially better chips coming out, and everybody's been getting into data center build out. So is all of it really necessary? Not necessarily. And now the question is, what happens to the economy if Microsoft pulls back, Amazon, and then that opens the door to Amazon pulling back, which opens the door to Meta pulling back, which reiterates why Apple didn't blow all the money on the data centers on commoditization in the first place, which then, makes people wonder, okay, is Elon Musk raising for XAI at peak market prices? Probably. So I don't know. What does that then do to capex plays like, rack installation companies, rack providers, Qualcomm's, Broadcoms, the whole chip stack, basically. Now, Jensen's like, oh, investors got the DeepSeek movement wrong. Okay. Now, we know we have NVIDIA earnings coming up, and they're probably still going to be okay. I still maintain that it'll probably take 6 to 12 months to actually see a slowdown. But I guess we'll see when the numbers come out. We'll certainly be covering them. So anyway, that's what I've got for now. Thank you so much for watching. I find it all very interesting, and I look forward to your commentary. Check out the courses over at mekevin.com, and we'll see you in the next one. Thanks so much. Goodbye, and good luck.